All right. So good morning, everyone. I'm Aishwarya Sitaram from Biocon Investor Relations team, and I would like to welcome you to Biocon's earnings call for Q1 FY23. I would also like to indicate that all participants will be in the listen-only mode, and there'll be an opportunity for you to ask questions after the opening remarks conclude. Should you need to raise any questions, please select the raise hand option under the reactions tab of your Zoom application. We will call out your name and unmute your line to enable you to ask a question. While asking, please begin with your name and your organization. Please note that we will not be monitoring questions on the chat box, but you can raise any technical concerns that you may be facing for our support team to help. I would also like to bring to your attention that this conference is being recorded. The recording will be available on our website within a day, and the transcript for this call will be available within the next 5 working days. To discuss the company's performance and outlook, we have with us today the Biocon leadership team comprising of Dr. Kiran Mazumdar-Shaw, our executive chairperson, and other senior management colleagues. I'd like to take this opportunity to remind everyone about Safe Harbor. Today's discussion may be forward-looking in nature, based on management's current beliefs and expectations. It must be viewed in concurrence with the risks that our business faces that could cause our future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. After the end of this call, if you need any further information or clarifications, please do get in touch with Nikunj or me. I would now like to turn the call over to Dr. Kiran Mazumdar-Shaw. Over to you, ma'am.
Thank you, Aishwarya, and good morning, everyone. I welcome you to Biocon's earnings call for the first quarter of fiscal 2023. And I'd like to start this earnings call on a note of optimism on the resilience displayed by India, whilst a large part of the global economy is bracing itself for a potential slowdown next year. Businesses the world over are reshaping their supply chains at a time when the world is facing uncertainties due to various geopolitical tensions. Every economy is trying to offset the impact of pandemic spend by lowering healthcare spend. Backed by strong domestic demand and steady global investments, I do believe that India is on its way to becoming the world's fastest growing economy in the years to come. As the pharmacy of the world, India has a key role to play in driving inclusive and equitable growth globally, particularly in healthcare. Policy support such as the Production-Linked Incentive Scheme and more recently the proposed Research-Linked Incentive Scheme will, I believe, boost investment in innovation. Enabled by continued investments in capacities, capabilities and R&D over the last few years, the Biocon Group has a window of opportunity to surge ahead into a stronger leadership position in biopharmaceuticals. Another important differentiator of global leadership in times of uncertainty is ESG. And as we transform into a future-ready leader, the Biocon Group is poised for strong and sustainable growth. Our vision towards environmental stewardship, diversity and inclusion and governance has been articulated in our recently published ESG report for FY22. Let me start with some organizational announcements. And before I discuss the business performance, I would like to make a few announcements. Mary Harney and Daniel Bradbury, independent directors of Biocon, have completed their second term of tenure with the company and have stepped down from the board and will step down from the board at the conclusion of, they have stepped down from the board at the conclusion of the company's board meeting yesterday. On behalf of Biocon's board of directors and management, we express our deep appreciation and gratitude to both Mary and Dan for their extensive contribution and stewardship. I would like to share a management update. I'm pleased to announce that Michael Cutter has joined Biocon Biologics as the Chief Quality Officer. As part of the executive leadership team, Michael will be responsible for leading the global quality organization across all locations and will be based in Bangalore. Michael brings with him over 3 decades of experience across quality control, quality assurance, and pharmaceutical manufacturing, setting the right quality culture and building credibility with global regulatory agencies. I would now like to present the key financial highlights of the quarter. At a consolidated group level, revenues for Q1 FY23 were up 23% on a year-on-year basis at 2,217 crores. Revenues from our biosimilars business delivered a strong year-on-year growth of 29%, while that of our generics business grew at a healthy rate of 19%, and research services revenues grew by 8%. Core EBITDA, which is a very key part of our business performance, grew at 25%, with a margin of 31% versus 30% in the same quarter last year. Profit before tax for the quarter stood at 197 crores, up 19% over 166 crores during the same quarter last fiscal. And net profit for the quarter stood at 144 crores versus 84 crores in Q1 FY22, reflecting a growth of 71%. During the quarter, we also recorded a forex loss of 38 crores, primarily due to restatement of Goldman Sachs OCD investment in Biocon Biologics, as compared to a gain of 17 crores during the same quarter last fiscal. Our gross R&D spend was at 223 crores versus 136 crores in the same period in the last fiscal, an increase of 64%, corresponding to 15% of revenues ex-Syngene. Of the 223 crores, 198 crores is expensed in the P&L, while the balance amount has been capitalized. 120 crores were expensed in the P&L in Q1 FY22. With this, the reported EBITDA for the quarter was 478 crores versus 437 crores, reflecting a 9% year-on-year growth, whilst margins stood at 22% against 24% reported in Q1 FY22. EBITDA was primarily impacted by the forex loss, as mentioned earlier, higher operating costs, particularly due to the inflationary impact on raw materials and freight, as well as personnel costs linked to new hires and annual increments, which obviously will be at a higher level in Q1, but will get normalized over the year. Furthermore, R&D investments increased by 78 crores, reflecting pipeline progression for future growth. Now let me turn to segmental business performance during the quarter. Let me start with generics. The generic and as a second-line therapy in patients with advanced squamous cell carcinoma of the anal canal who have received prior chemotherapy. BC101 is also being evaluated as a monotherapy in patients with advanced or incurable cutaneous squamous cell carcinoma of the lung who have received previous anti-PD-1 therapy. Primary results for the dose expansion arm of this study are expected in the second half of calendar year 2022. Post the first round of seed funding, Bicara continues to secure funding from external investors to support its clinical development activities. Now turning to research services or Syngene, revenue from operations stood at 645 crores for the quarter, indicating a year-on-year growth of 8%. Profit before tax for the quarter was at 93 crores as against 95 crores in Q1 FY22. The first quarter results were against a strong quarter last year due to sales of COVID treatments, where remdesivir in the midst of the second wave of the pandemic was a key product. No sales of remdesivir were recorded in the first quarter this year. Excluding the impact of remdesivir, the underlying revenue from operations growth in the quarter was around 30% year-on-year. The first quarter results reflect strong underlying performance across all our business divisions. A recent highlight was the signing of a 10-year agreement with Zoetis for the commercial manufacturing of the drug substance for Librela, a first of its kind injectable monoclonal antibody to alleviate pain associated with osteoarthritis in dogs. This deal is expected to start generating revenues in the second half of the fiscal and will be worth up to $500 million over its term of 10 years. This is a strategic move for Syngene's biologics business, providing a pathway towards the FDA and EMA regulatory approvals anticipated later this year. The company continued to invest in infrastructure, including a kilo lab in the development services division, as well as a lab housing over 150 scientists and analysts in Hyderabad, dedicated to PROTACs, Syngene's novel cancer drug discovery strategy for its clients. Syngene has raised its revenue guidance for the year from mid-teens to high teens, taking into account a favorable change in the rupee-dollar exchange rate and, of course, the recent agreement with Zoetis. I would like to conclude by saying that FY23 will unlock the potential of several of our investments across businesses, be it in capacities, pipeline, or partnerships. New launches and enhanced capacities will drive growth for our API and generic formulation business, while the strategic transactions with Serum Institute and Viatris, which are on track towards closure, will accelerate growth of our biosimilars business. We see strong growth and contract extensions, and the new inflection point in contract manufacturing, catalyzed by the Zoetis biomanufacturing contract, will drive the growth momentum for Syngene. In line with our focus on sustainable growth, we continue to invest in people, policies, and processes to ensure value creation for all our stakeholders. And with this, I would like to open the floor to questions. Thank you.
Thank you, ma'am. Should you need to raise a question, please select the raise hand option under the reaction tab of your Zoom application. We'll call out your name and unmute your line to ask the question. So the first question is from Damayanti Kerai from HSBC.
Hi, good morning. Ma'am, you mentioned that pickup in market share for Simply will be one of the key near-term driver for biosimilar sales. So what we have seen in last few months, that the market share seems to have saturated in low single-digit number. So what will be the factors which will improve pickup in Semglee market share from current level? And also for other two launched biosimilars, Ogivri and Fulphila, again we see some kind of saturation in the market share. So just wanted to understand what are the key hurdles which are stopping you to improve market share from current levels? So this is my first question.
Thanks for your question. I will turn this over to both Shreyas and Matt to respond to. But all I can say is that we are seeing a good pickup of all these products you mentioned. We are tracking in the right direction. And I think what we are really seeing is a strong performance in the second half of this fiscal.
Thanks, Kiran, and Matt, please feel free to add to the other questions. I think Damayanti, let's answer your question product by product in the US. I think starting with Glargine, and I think your comment was saying the market share seems to have saturated. I think just to correct that data point, we started this year with a sub 3% market share, and we've moved that towards 9%, just a shade of that 10%, which we did in July. So when we started this fiscal, we had guided that towards the second half of the year, we'll be seeing this move towards the mid-teens. And the way Viatris has been progressing, we see that growth from 3% to 9%, moving to 10, and then towards the mid-teens in the direction that we had projected earlier. So we see that move happening in the direction that we had projected. Viatris has also recently added significant plans beyond the Express Scripts Prime Therapeutics that we had talked about earlier on to move into regional pharmacies. We've also got regional formularies. We've also got a significant customer addition towards the beginning of this month. And these are all the right steps which will help us get towards that mid-teens market share that we had guided towards at the beginning of the fiscal. Now, you've talked about the other two products, which is trastuzumab and pegfilgrastim, and we'll talk about them in a bit. But starting with trastuzumab, there was a particular situation where in April, May, we'd seen the market share kind of dip from that 10-11% to 7-8%. And that's because Viatris did lose a customer during the process, and they've gained that in June and July, and we're again starting to see those market shares move up towards 10% and back to where we are. So I think these are normal course of business activities where you win a customer, you lose a customer, you lose some share in a particular formulary or a particular account. And effectively what we need to see is that they've been able to be resilient in the market and held on to its market share despite increased competition. Likewise with pegfilgrastim, where a market share is held on that 8-9%, even though we've seen the innovator themselves lose market share, as well as Coherus, which was a big market player at one time, significantly lose market share to new competition. So I think overall, if you look at it, we've held the market, and that market is steadily moving towards where we had guided at the beginning of the fiscal. But anything else, Matt, that you may want to add, please go ahead.
Yeah, thank you, Shreyas. I think that was a really good explanation. I would just call out the Viatris commercial team as we continue to look at how this industry, especially within the U.S., ebb and flows.
and it will ramp up. Right now, it is much smaller than the US and the European markets, but many of the places in many of the countries, the prices that we get is much better than even Europe. So the emerging piece of the countries is quite big.
And maybe Matt would like to comment on the non-US markets.
Yeah, sure. Thank you for the question. I think we still see continued good growth within Europe, especially from the Viatris clusters, Germany, as well as in France. You're going to see those continued launches of new products that we talked about in R&D. And also as we progress within our integration with Viatris, we're going to be looking at new markets and expansion there. So Europe is still a very key focus for Biocon Biologics and has a tremendous amount of opportunity for us, as well as, the US and North America.
Got it. My second sub-question on this, and I'll be brief, is on the pricing dynamics in these different, I think EM was briefly touched upon, but if you can also help us understand, there is market share progress, but there is not value share progress, if I can use the term. Maybe the only data we have is US. So what is happening to pricing in some of these markets, including the US?
Shreyas, maybe you want to take this?
I think, Shyam, these things would vary from, for two things. One is from the market and other is on the product category that we are talking about. Say, if we were to look at the oncology products in the US, we've typically seen, if you were to take the pre-biosimilar entry launches of products, you would see discounting anywhere in the region of about 50 to 60, 62%. From that pre-biosimilar days. If you were to move that into Europe, you would see that discounting to be much lower in the range of about 30 to 35% for the molecules that we operate in. And that's also a factor of of competition, of the market, of the tenders, also of the base pricing that these molecules are vis-a-vis where the discounting would be. You'd also see different categories of product attract different discounting. Like if you were to look at insulin, which is in the US, a product which is more contracting cycle kind of a molecule, and where the way Biocon, or say in this case, Viatris was able to displace Lantus and move into a formulary position, those discountings will be probably slightly sharper than what we've seen for the buy and bill kind of category in the oncology space. But if you really look broadly across the category of products that we've launched in the oncology biosimilars as well as the insulins, more or less the pricing discounting has been reasonable. We've not seen any cliff despite the competition. Now oncology, you see about 4 or 5 players per molecule. But there has been pricing sanity overall, so to say, and it's been in the US, particularly, as I said, in that 50 or 60 range. And then in Europe, probably it's in that 30-35% range. So there has been some respect for the kind of work that has gone in developing the products. And it's reflecting in the stability that you've seen overall that's prevailed.
Thank you and all the best. Yeah.
Thank you, Shyam. The next question is from Harith Ahmed from Spark Capital.
Hi, good morning. Thanks for the opportunity. On denosumab and ustekinumab, last quarter you had talked about starting phase 3 trials in the first quarter of FY23. So can you update us on the status of those two trials and trying to understand if the R&D spends for the quarter reflects the phase 3 spends as well? And will there be a further step up in spend R&D, in the coming quarters?
Shreyas, do you want to take this?
Yeah, I mean, Harith, the question wasn't very clear. I think you were pointing towards saying that we've progressed ustekinumab and denosumab into the clinic. I think you were looking for an update on where these products are headed, and
yeah.
And is that what you were looking for? And
yeah, whether we started phase 3 trials already.
Yeah, so we have. I mean, I would like to confirm that those things are progressing as we announced, and and we would be looking to move these products further. We have started these global clinical trials, phase 1 and phase 3, and we should be looking to get to filing towards the end of calendar year 23 for ustekinumab and end of calendar year 24 for denosumab. So they are progressing as per plan, and we expect them to move through the quarters. You'll see those R&D expenses come up as we progress these molecules.
Okay, got it. My second question is on the fundraise at Bicara. So what's our stake? I mean, we talked about continuing to raise funds through the first quarter. So my question is on our current stake in this associate entity as of June.
Yeah, so I think they have raised $26 million in the first round, and they are expecting to raise a larger. They've managed to raise about $6 million in the second, but they expect to raise an even higher amount, which they believe that they can raise by the middle of September. But these amounts, as you know, are really required to see the clinical trials get to a certain level, and they're very confident. They also have entered into various business development discussions because the data is trending in a very promising direction. So there's a lot happening at Bicara, and we will keep reporting it over the coming quarters.
Okay. So from the disclosed stake in Bicara, which was around 74% at the end of March, has there been a further reduction? I'm trying to understand if the share of losses from the associate will decline further. There's been a lower number in 1Q versus 4Q. Trying to understand if this will.
Well, Siddharth will respond to this, but we are not. Siddharth, you might want to respond to this.
Right. So the stake in as of June was roughly 60%, and I think as the fundraise continues, we will see the stake further go down below 50%.
Okay.
No, I think he wanted to ask you about share of loss.
So share of loss, of course, we are taking the 60% share of loss in our P&L. And this quarter, because of the fundraise, there was also a step up in the valuation of the investment. And I think the P&L impact of the step up of valuation, less the share of loss, was not significant. It was a very low number.
Okay. Last one, with your permission. This 38 crore forex loss at the consolidated level, that includes the 43 crore loss at Biocon Biologics related to the Goldman Sachs OCD instrument, right?
That's correct. So there were gains in other parts of the business. Okay.
And the other income for the quarter at 78 crores, there's been a bit of a spike. Are there any MTM gains related to Adagio there?
No, Adagio, there's no gain. I think the main gain is that mark to market or the step up of the Bicara investment. So that's the main flux compared to previous.
Okay. Got it. Thanks for taking my questions.
Thanks, Harit. Next question from Neha Manpuria from Bank of America.
Thank you so much for taking my question. Siddharth, on the Viatris, funding, have we decided on what would be the amount that Biocon would have to put in, after the
investments into expansion of our Malaysia capacities and and also the expansion of our drug product capacities for monoclonal antibodies. So these are the large investments going into the business on top of R&D.
Understood. Thank you so much. Shreyas, one last question. Any additional update on Aspart? Is there a chance we, get the approval before the current contracting cycle, or do you think the probability of that is, lower now, based on your conversation with the agency?
Thanks, Neha. That's an important part. I think we've been discussing with this group that we've responded to the agency on the CRL that we've received, and the agency has indicated that they will visit us in this quarter, and there will be an inspection. We are quite confident that we should be able to get the approval once they've visited us. So we are still hopeful that all of this should be done, and Aspart approval should be in the bag towards the end of the year, the calendar year. Yes, there is, of course, the contracting cycle which runs through July through, I would say, September, October, and there is that risk that we may not be able to be in the middle of that contracting cycle, taking us away from that big chunk of the commercial business that is available for this asset. But we would certainly have then the opportunity to look at any mid-cycle contracting as well as any regional businesses like we did with Glargine. And now that we've got presence with Semglee, I think there is an opportunity to see how we can put past the main commercial contracting national formularies into a more distributed phase. So, I mean, yes, it's not the best situation that we could have been in, but we don't also see that as a complete lost opportunity. The focus right now, of course, is getting the approval in place.
Thanks, Neha. The next question is from Prakash Agarwal from Axis Capital.
Yeah, hi. Am I audible?
Yeah.
Yeah, thanks for the opportunity and good morning. I just wanted to understand a little bit on the margins better. I do understand R&D, you're already guided, it will go up. Commercials, obviously, it will expand, and so are the revenues expanding. More from second half when we add, the Serum deal, which is expected to go at 33% margin business, as well as Mylan consolidation. So how should we think about margins there? I mean, last year margins was good. This quarter, little, I would say it's softer. How do we see the margins rolling in? And this I'm saying reported margins, not the core margins, because R&D has to be there, expansion has to be there. So just a little color would help.
Chini, you might want to comment.
Morning, Prakash. A couple of things. One, in terms of let's start with the core EBITDA margin. The core EBITDA margins this quarter is slightly soft when you compare against the sequential quarter, but it improved over Q1 of last year. The softness in this quarter versus Q4 is because of, as Kiran mentioned, there's an impact of the increased salary cost as increments kick in, which levels off over the quarters. And the second one is we've been impacted by the euro-dollar movement. So that reduced the profit share and hit our margins during this quarter. If you look ahead, particularly post Serum and Platina and Viatris acquisition, we expect to maintain core EBITDA margins in the mid to high 30s. So there, as a consolidated, as you look across the three businesses, the core EBITDA margins remain the same, and we expect to remain in the mid to high 30s. Coming to R&D cost, of course, the increased revenues coming both from Viatris and Serum gives us the ability to spend more, invest more into R&D. And we have always guided for the 10 to 12% in terms of R&D cost. So we'll have to look at it from that range. Of course, it won't be quarterly. This is more on an annual basis or across the program. On a quarterly basis, things could go up or down. depending on the progress of the trial. But on an annual basis, particularly over the life cycle of the program, you would see R&D cost and to being 10 to 12% of the increased revenue base.
Of the increased revenue.
Which is indicating that we're investing more into R&D with more of the pipeline products moving into the clinic.
Okay, understood. And secondly, on updates on the vaccines you put out, COVID related and mosquito borne related. So I mean, globally we are seeing that volumes are coming down, and mosquito borne, apart from Africa, the volume has been coming down. So is the deal includes the new range of vaccines, maybe the monkeypox, or a lot of new things are happening globally on the vaccine side. So is the vaccine deal with old and new portfolio? How should we think about this? As well as the second part to this is, you mentioned about BEVA inspection poised around August. So as part, is there any update? Thank you.
I think, Prakash, first and foremost, as you know, viral diseases are becoming very rampant, and there's a lot of concerns around viral diseases like, which wasn't there in the past. So I think vaccines are going to become a very important segment, and I think, Serum Institute is well placed to basically develop new vaccines and cater to these global needs. So from that point of view, I think even though the COVID vaccine demand has come off, I don't think that it will completely come off, because as you can see, COVID is still very much in the air. And I think annual, COVID shots like annual flu shots will become the norm. So I don't think it's going to completely fall off. And then you have many other viral diseases that are being looked at. Now, when it comes to the bevacizumab and aspart, I think we mentioned that we are anticipating inspections in August. So both these will undergo inspections, and that's why we are hopeful that we will get approval for both these products by the end of this calendar year.
Okay, perfect. So aspart also in August, that's what the clarification was.
Yeah.
Okay, perfect. And on vaccine, part of the question was on the future vaccines also. Is it covered in the deal? Or
Yeah. The vaccine deal is covering all vaccines.
Okay, perfect. Thank you and all the best.
Thanks, Prakash. The next question is from Yash Tana from iThought Advisory.
Hi, good morning, team. I hope I'm audible.
Yeah.
Yeah. So I went through the annual report and I wanted to clarify a few things. So Biocon Pharma INC USA, which is our US-based subsidiary for the formulations of Biocon Pharma India. So it had revenues of 472 crores and a PBT of 30 crores for the year. Well, last year it had revenues of 442 crores and a similar PBT levels. So is it the right understanding from my side that the US generic formulations portfolio has just grown 7% year on year despite we launched everolimus?
That you might want to take.
Yeah, Abhi, maybe you can answer that.
Sure, Siddharth, thanks. Yes, we mentioned this before also. We've seen some headwinds
from US?
Yes.
Okay.
I mean, our emerging market revenues and European revenues would start in this fiscal year.
Okay, got it. That's helpful. My second question was, so there was this media article relating that Sanofi has reduced prices for insulin for uninsured patients to $30 a month supply, and there are talks to cap the insulin prices as well in the US. So how does this impact us and our competition? Like, will this hit the profitability in US for the insulin business?
Well, I think Biocon Biologics is in a very good position to really play a key role in these market price expectations for insulins. And I think that's what we believe will really increase our presence and market share in the US. And maybe Matt, you want to add to this?
Yes, thanks, ma'am. Look, the RHIs, there's multifaceted channels. So you have your payer channel, you have your cash channel, you have even long-term care hospital. Being vertically integrated and well-positioned, we're able to play within all those channels. And then also what Viatris has already done and now moving over to Biocon Biologics allows us to continue to play on that leverage. So we're well-positioned within our diabetes therapeutic area as well as our RHIs as we look at the full market within the U.S.
Got it. Thank you. Those are my questions.
Thanks, Yash. The next question is from Sameer Baisiwala from Morgan Stanley.
Yeah, thank you so much, and good morning, everyone. Just continuing with the previous question on RHI, is it possible to discuss a bit more, what's the addressable market and when do you see the approval cycle begins for you? When can this be a meaningful product?
Shreyas, you might want to take this.
Thanks, Sameer. I think as we said earlier, the RHI franchise is not one product, but multiple products, multiple SKUs. So you have the soluble, you have the mix, which is the 70-30, and you have the N formulation, as they call it. Now they are available as vials and they're available as pens. And there's also the highest strength 500 IU formulation as well. So it's all recombinant human insulin, but there are a whole bunch of products around it. The whole insulin RHI, what we would call it, a recombinant human insulin franchise, is somewhere in that $1 billion range, give or take a little bit. And the dominant player, of course, is liability. So they've been running that franchise. They have most of the market share. We've been working with the agency, bringing product from a filing perspective, starting with the soluble to the mix, and then we would of course get the NPH, as they call it. We would do that as well, and the high strength. So we are looking to progressively move into getting the full franchise to the US somewhere in the next year. We've already got the agency to agree that we may not need a full-blown phase 3 trial because we've characterized the product very well. So we are expecting a waiver of a phase 3 because of the kind of characterization we've done for the asset, and the agency has agreed with our assessment, our scientific evaluation of the drug. And most importantly, they believe that we have confirmation from the agency to say that these can be used interchangeably once launched. So we believe that the full opportunity that is there currently in the US is available to us, Sameer. And as these products get approved, we intend to launch the full franchise towards 2024, where all of this should get available. Does that answer your question, Sameer?
Yeah, it does. Thank you. I got muted again. Okay, and just on this, Shreyas, how is the capacity utilization in Malaysia right now? And related to that is, are we having any, supply, capacity constraints either for Malaysia or for drug substance antibody here in India for near-term growth?
Yeah. So I think in Malaysia, if you remember, we had invested substantial capacity for drug substance, for drug product. We had also added on additional pen assembly lines. So we don't have a capacity challenge at all because we had also planned for the upcoming Aspart launch coming up, which we were expecting this year. And we don't believe that there's an issue on either the drug substance or the pen assembly or the pen fill finish. Obviously, we are targeting a much higher capacity, and which is why we're looking to invest in the drug substance capacity, which we shared with you the previous quarter, and we are further building up capacity so that further, ahead into the decade, we should be able to launch more capacity across the world. On the non-insulin side, we've been making investments progressively in drug substance facility, which was recently approved. But beyond our in-house capital investments, we have developed a external manufacturing strategy, which is an asset-light model, which is not necessarily something where we invest in, but we partner in such a way that our manufacturing is then closer to the market that we supply in. And that's a conscious strategy which is begun from India, but then we will, of course, expand it to other geographies so that we don't necessarily have to ship glass and water across the oceans. So that's really how we intend to meet demand, which we expect to grow several fold. You heard Sushil talk about it, and Matt's having the same view. So we don't see a capacity constraint, summary to summarize.
Okay, thank you so much. With your permission, one final question. What's the timeline to take Taojo, which is Glargine 300 and Per2 into clinical trials?
So again, that's a very interesting question because Toujeo is essentially the same drug substance as it's the same Glargine drug substance. It's formulated differently in a higher strength, which is a 300 unit strength against a 100 unit strength for Lantus. So it's not a new clinical trial per se from a phase 3 perspective, but it's a new phase 1 study that will need to be done. But there's a different device which is very unique, and we are making sure that we have that new device covered so that we can be prepared for a potential approval. Now, this product currently has an IP which runs towards the later half of the decade. Now, we will have to see what IP strategies that we come up with, which will allow us to decide what our launch strategies would be, which would be different than the approval strategies.
And for Per2?
So pertuzumab, we are progressing well. It's certainly an asset that we have partnered with Viatris, and we are developing that asset. We have a very good exchange going on with the agency. We have a position where we believe we can develop this in a very economical way. Sorry, somebody you say?
No, it's echoing. That's all.
Okay. So we have the opportunity to be amongst the few players who are developing this asset. There are not very many players, and we have the opportunity of probably being there at market formation with this asset, and it will be very synergistic with our other oncology portfolio. So very bullish about that as well. Samir, I think you're muted again, but maybe Nico can.
Yeah, okay, that's fine. Thank you. Thank you so much. Yeah.
Thanks, Samir. The next question is from Nithya Balasubramanian from Bernstein.
Thank you so much for the opportunity. One question on insulin aspart. So will you have the flexibility to launch two brands like you did in insulin Glargine? One at a higher price point and one at a lower price point? Because it's a single file, that's the reason I'm checking.
Matt, would you like to respond? The high-level response first to that, Nithya, would be yes. It's an established model in the US to launch an authorized generic, so to say, in a very broad way. So that model exists, the precedent exists. There are other brands or other companies which have followed it. So that's an opportunity we could look at. But maybe Matt, if you would want to comment on that.
Yeah, sure, Shrihas. 100% I agree with you. I think you have to look at all those channels, both branded, non-branded, and I think the Simply set a unique path and one in which we have great experience. So not ruling out any of those options. I think what we're looking at and always have at Biocon Biologics is accessibility and affordability, and having those two types of situations drives that initiative for us in the U.S.
Thank you so much. My second question is on Europe. I think the biggest challenge in Europe biosimilars has actually been, let's say, the lower than anticipated price points for biosimilars, because your starting price is already lower. And if I look at the data, your price erosions have been in the range of 70 to 75%. But now that Biocon is fully integrated and that you don't have to share economics with Viatris, should we expect you to, I'm seeing very low market shares for your current in-market products. So can we expect you to get a bit more aggressive about price discounting now that you have room in order to gain market share?
Again, if I can respond to that, Nitya, I think we can look at the data points one more time. But I think you're right in the sense that the way Viatris has currently looked at Europe, there is certainly a headroom for improvement, and we are collectively looking at what are the strategies that could help us move forward. As we've discussed previously, Europe's not a monolith. There are several different market archetypes, and the therapy areas that we operate in are also vastly different in terms of how you realize these opportunities. Some of those could be, trying to get those opportunities through realizing the retail opportunity in, say, Germany or in France in products like the insulins. Or there could be oncology, which is largely a tender-driven market across Europe. And then there is, of course, the Nordics, where it's a federal tender, where it's a winner-take-all kind of a model, where I think you referred to the 70% discounting, which even the originator companies have kind of subscribed to. So there are different models, different therapy area models. The integrated option now with us, that we will be one company, will certainly allow us more headroom to look deeper and closer into this. And Matt and his team are closely connected into this to see how we can move this forward. Certainly agree with you. There's a lot of headroom there.
Thank you so much, and all the best.
Thanks, Nitya. The next question is from Surya Patra from Phillip Capital. Surya, are you able to unmute?
Hi. Hello. Am I audible?
Yes.
Yeah. Sorry for that delay. So just one clarification I wanted, sir. Let's say you mentioned about the margin impact for the biologic business was largely led by the R&D spend. And also what we are indicating now, that post Viatris integration, the intensity of R&D spend is likely to continue. So by that, are we indicating even the margin profile of integrated operation will be similar, what we are currently seeing?
Surya, yes, to clarify, let's again start with core EBITDA margins.
Yeah.
We see that the core EBITDA margins will be sustained post-integration and after all the eliminations. And with the increased revenue base, we will look to increase our investments in the R&D to fund our future growth.
Okay. Sir, in the initial period, is it like that the benefit of the end-to-end integrated operation, will not that be an incremental benefiting kind of a theme for the integrated organization?
As Viatris put out the guidance at the time of the acquisition,
sure,
we had indicated that Viatris business has the potential to deliver 1.1 billion revenues in 2023 with a 250 million EBITDA. But as you go through all the eliminations, and you look at the final core EBITDA margins, it's still pointing into the high 30s. When you combine the serum business the existing BBL business and the acquired Viatris business.
Okay, sure. Second question is on the biosimilar business again, sir. So in the presentation, ma'am, you have mentioned that the growth of the biosimilar business, excluding the COVID-related contribution in the corresponding previous quarter, the growth could have been 46%. Otherwise, it is in the reported number is 23. So here
29.
29, yes. So I just wanted to know whether there was any COVID-related benefit that the biosimilar business had witnessed in the corresponding previous quarter.
No. So basically, what we're saying is that year on year, if you look at the growth, it could have been reported as 46% as opposed to 29%, because last fiscal we had the benefit of COVID-related products.
Okay, but which product would have contributed? I believe that
itolizumab and the remdesivir.
But whether that was part of the biosimilar sales, no.
It's a part of our branded formulations business. We have an India business, and that was part of that business.
Okay. So I was relating itolizumab to the novel biologic and remdesivir to Syngene business. So that's why. No,
so Syngene actually, sold the product. That is the drugs. I mean, they made the drug substance and drug product, and Biocon Biologics through its branded formulations business marketed the product in India and also exported the product to many of their emerging markets.
Okay, sure. Just last one question. Whether am I right that the contracting cycle for most of the biosimilar for the current season has been done? If that is so, then could we have some clarity about the progress in terms of market share for interchangeable insulin and at least PEG?
It's still underway, Surya. We should be able to talk to you in due course.
Sure. Okay. Yeah. Thank you. Wish you all the best.
Thanks, Surya. The next question is from Sheersh Jain from Apex Capital.
Yeah. Hi. Good morning, everyone. Just wanted to understand the double counting of revenues that might happen upon the integration of Viatris. So currently, based on Q1 numbers, Biocon Biologics run rate is roughly $400 million, and Viatris has guided for $1.2 billion of revenue for the whole year. So upon integration, what shall be the total ballpark range of revenue that might happen, eliminating the double counting of revenue?
Chini, you might want to answer this question.
Suresh, hi. Roughly about 30% would get eliminated in the intercompany elimination. 30% of the 1.1 billion.
Okay, understood. So the ballpark range would again come down to $1.2 billion for the combined entity. Is that correct?
Yes, excluding. On top of the Viatris business, what we have is our sales in the emerging markets. That had last year we ended with about 240 million. These are sales directly to the emerging markets and not through Viatris.
So, based on your...
You could model growth on that, and then you have the serum business that we're acquiring, which has a potential $300 million of revenues.
Understood. Thank you so much.
Thanks, Sheersh. The next question is from Tushar Manudhane from Motilal Oswal.
Yeah, thanks for the opportunity. Just on the generic side, while there has been some temporary shutdown for the quarter, but just would like to have your comment on the profitability, as in how much has been the impact of pricing erosion and how much would come back with the revival in this production.
So price erosion, is of course a continuing thing. We've seen our gross margins at still decent levels. We have seen increase in operating costs during the quarter, including the salary increments which were given in the first quarter. And in terms of the overall revenue guidance, I think we had a couple of brownfield capacity expansion projects going on, which are expected to complete in Q2 for our synthetic manufacturing blocks in Bangalore, and these would lead to incremental sales in the second half of the fiscal. So Q2 would be more or less at similar levels at like Q1 for the generics business.
Got you. That's it from me. Thank you.
Thanks, Tushar. Next one is from Sameer Baisiwala, Morgan Stanley.
Yeah, just a quick clarification. Can you just participant back? Did you say 300 million from Serum deal? I thought it was more closer to 400.
300 plus. It's all dependent on the pricing of the vaccines.
Okay, but your initial, communication when the deal happened was closer to 400. So you are sort of taking it down, is it?
Yeah, it's linked to the pricing of the vaccines. Not taking anything down. We just really meant was 300 plus, which could go from 300 to 400. But yeah, we'll have to really see. It's a mix of things. There are products that are at the $3 range, which 100 million into 3 gives you 300 million. That's our kind of minimum assured revenues. And there are products that are priced higher that can take up your average price.
Okay, and for both the both types of vaccines, your margin profile remains same, which is 33-34%.
Yes, there's a minimum committed margins, which will give us at least 36.67% of revenues.
Okay, got it. Thank you so much.
Thanks, Sameer. Next one, Nithya from Bernstein.
Yeah, hi. A follow-up on the vaccine deal. If you can help us understand in FY23 and 24, what is the portfolio of vaccines that you will end up selling? Is it just the COVID vaccines, Covishield and Covovax? I understand the malaria, dengue, etc. is still in the pipeline. Some color, please.
So, Nithya, we are entitled to sell any vaccines that are offered or produced by Serum Institute, and it goes beyond COVID vaccines. As you know, there are many other vaccines. In fact, recently they announced the HPV vaccines, there are flu shots, there are pneumococcal vaccines. So there are a lot of options for the portfolio of vaccines.
Understood. So this will be, you will take a call based on the demand, etc., to meet that 100 million doses number.
Yeah.
Okay. Thank you so much.
Thanks, Nithya. Prakash from Axis.
Yeah, hi. Thanks for the opportunity again. Question is on if there's any update on the Sandoz deal that we had done 2018. We have heard from our unpartnered 2 molecules coming in, but nothing from the Sandoz side for long.
So the 2 Sandoz programs are in a preclinical stage of development.
Okay, understood. And secondly, on the 2 R&D programs that you disclosed last quarter, and saying that phase 3 has already started. So these are simultaneous studies, which I understand, phase 1 and phase 3. But when we see the competition who already started phase 1 and then now entered phase 3, how are we different in terms of approval and launch timelines? Are we in the second wave, or we still have chance to be in the first wave?
It all depends on the review process, and it depends on how the others are being reviewed and how strong their programs are. I'll just give you one example. For instance, Biocon was probably the 3rd or 4th company developing pegfilgrastim, and yet we were the first to be approved. A similar case was in the case of trastuzumab. Again, we didn't think we would be the first company to be approved, but we were. So it's very difficult to predict or project what can happen.
Okay, fair enough. And one more on the the funding of $800 million, clearly mentioned 250 from Biocon. But this 550, remaining 550, is it largely the existing PE guys or new PE guys, or Serum might also pitch in?
Yeah, so it's a combination of both existing and new.
Okay, but Serum could add more?
Yeah.
Okay, lovely. And what else? No, so thank you so much and all the best.
Thank you.
Thank you, Prakash. That was the last question. We thank you all again for joining us today. If you have any additional question, please feel free to reach out to Aishwarya or me. We're looking forward to seeing you again next quarter. Have a good day.
Thank you.
Thank you.
Thank you.
The recording has stopped.